Let's face it, trading is not easy. In fact, it is common for traders to go through periods of ups and downs when it comes to success. How to deal with the down periods has a direct effect on when and how successful the next up period is going to be. In this video, we're going to get back to basics with a simple strategy for struggling traders. Here's a simple moving average day trading strategy that can be used in any financial market. It involves spotting trends and understanding how to join the trend while controlling risk. So the first thing we need to do is choose the right moving average. Now for day trading, a short-term moving average, such as the 9 or 20-day moving average, is typically used. This helps traders quickly identify short-term trends in the market, giving you the directional bias to then look for price action setups to enter a trade with the trend. So how do we identify the trend? Now the easiest, most common answer here is if the price of a security is above its moving average, it's considered to be in an uptrend. If it's below the moving average, it's considered to be in a downtrend. Next, buy signals. You want that buy signal. There are multiple ways to enter trades once you've identified the trend. One commonly used method is to look for a higher close of a candle on a bullish trend that has been established. Now the other involves simply waiting for the price of a security to cross above its moving average, which signals a potential uptrend and a good time to buy. Sometimes you're looking for the old sell signal, and similar to that long signal, once a bearish trend is identified, we're waiting for the first lower close of a candle to initiate a short position. Again, another more aggressive entry would be to wait for the price of security to cross below the moving average, signaling a potential downtrend and a good time to sell into it. So how do we control risk? To manage risk, it's important to use a stop loss order when entering trades. A stop loss order will automatically sell out of your position if the price of a security falls beneath your specific level. This helps you limit your potential losses. A basic stop strategy would involve a candle close in the opposite direction of the trade, on the opposite side of the moving average, forcing a stop to trigger and the trade to be closed. It is important to note when you are struggling to focus on simplifying the process. Concentrate on one trade setup and one execution first. This strategy is a basic moving average trading strategy that traders can gain confidence with and focus on looking for a single action in a stock before executing a trade. This strategy can also be expanded. For example, what if we added this basic entry method to stocks that also have news catalysts? This can provide an initial directional, news-based bias that in conjunction with a simple moving average can provide excellent trading opportunities. Now, as always, be sure to backtest all strategies before using them in the live market, and always join us live on Trader TV Live. Check out our free watch list daily to see what is moving.